We're live. We're a couple of minutes late. Dwayne and I we talk so much, right? So
hit record button or hit the live button.
Yeah.
We're giving it all. It's like the radio shows. I used to be when I used to have to drive like when we were all driving to work. Remember when you had to commute to work, Doug? Like you spent an hour in your car. I love listening to the fan, and they used to say all the good conversations were off air between commercials. So we'll bring our good conversation right back here now. So no commuting time needed, right?
We're having this great conversation. I said, we got to go live and bring this to the group. So, all right. So, again, I'm Doug. If those that are new in the group, I'm the host around here, and I wrote the book, which we're going to talk a little bit about today. But I wanted to bring Dwayne on here. So I'm starting a new series. The other day, I interviewed a tax lawyer, and Dwayne's a CPA, and I wanted to bring him on. And so for our U.S. folks that are here, Dwayne's in Canada. We're going to primarily talk about Canadian taxes. Next week, I have a tax person from the U.S., so we can kind of cover the U.S. side of it as well. So, Dwayne, why don't we just start off, introduce yourself, your background, what do you do, all that kind of stuff.
All right. I help people sleep better at night, Doug, and get their time back with their families. Stop spending hours and hours doing your own taxes. As a quick example, one of my clients, she spent over 40 hours doing kind of the bookkeeping and putting together her stuff. And I'm like, you're the most expensive bookkeeper in the world. As a therapist, you're making $100 an hour and you've spent 40 hours going through receipts. So that's what I do. So so my name is Dwayne Richards. I am I remember to use this. How do you branding? I refer to myself as the enlightened accountant. Yes, the enlightened accountant. I am a CPA, also licensed financial advisor in the province of Ontario. And why enlightened? Because I spent a good chunk, like you, I spent a good chunk of time in the corporate accounting world. And then I saw the light. And then I embraced the home-based business industry. I tried network marketing, but unlike you, I was not so successful in it. We tried about 12 different companies. Can you imagine that? 12. I love them though. There are lots of great products, right? All of them great products. And just, I was not a very good salesperson. And now I figure I don't have to be in one, but I can service people who are in network marketing, or better yet, have a home-based business. You don't have to be a network marketer to work with me.
So Dwayne, one of the things that you said to me when we've talked, many times we've been talking here, but you were in the corporate world as a CPA, as an accountant.
Yeah.
You didn't know anything about taxes.
And
you didn't know anything about home-based business taxes.
Zero, like none, nada. For 20 years. And we went through a divorce. I have they're teenagers now. And I'm like, and even worse is I had a side hustle. We had this conversation. I was a hockey referee. I was a hockey referee for 22 years. And it's like, oh, just pay me cash. Hey, Doug, just pay me cash under the table. Because I was making good money as a corporate accountant. I'm like, I'm not going to pay tax on this money. And no one says like, yeah, but what about all the expenses incurred to earn that money? And guess what? FYI, minor hockey referees do not do it for the money. You're making $20 a game. The timekeepers make more money than the referees. By the time I drive my car, buy equipment, sharpen my skates, all that stuff, have to have my cell phone, have to have my internet, my home office, all that stuff would have been tax deductible against that income I made. Plus my annual membership. Business. And I'm like, for 20, so not until after I left my corporate job, I went to a presentation on how to pay less tax. And I'm sitting there, I'm like, holy caroli. And at the time I had just gotten into personal development. And in my first year, I wrote off my whole expense for Peak Potential's TR Becker's program. I spent over $20,000. And I wrote all of that off.
Yeah.
All of it, which triggered about an $8,000 tax refund in that first year.
Yeah.
Can you imagine?
So you learned that, you started to apply it. So
So I applied it to myself, and then even then, so it took me a while. Hopefully someone's going to ask this question, but it took me a while because then I said, when I first became an advisor, so then it took me a while. I was trying to do this and I just did it for myself, but I didn't have any cash flow. So I'm like, this is really good, but I wasn't getting a refund anymore because I didn't have any cash flow because I wasn't really working. I was trying to build a business, right? And it's tough at the beginning. I tell people, start your side hustle while you still have your day job and let Revenue Canada fund your startup.
Yeah.
It's in Doug's book, I'm pretty sure. And so I didn't have, so I have but the other thing is you're going to have lost carry forwards. So I have a bunch of those because lost carry forwards, because you have more costs early on in your business when you don't have a job anymore. You have more costs than revenue, and you can carry that forward for a while. But then when I became an advisor 5 years ago, I met with a colleague. You kind of reach out to people. Hey, I'm joining the business. Any tips? And he's like, yeah, I do about 300 tax returns a year. I'm like, you dumb? Why would you ever want to do that? And then last year I met a colleague and her mom lives in Windsor in her early 70s. And she does 1,200 tax returns a year. She works 3 months a year, specializing in nurses and truck drivers. Nurses that live in Canada and work in the US. Truck drivers that live in Canada and drive in the US, because it's a little bit more complicated than a straight T4. And I got thinking, it's like, that sounds like a pretty good model. So last year I doubled my tax business. I said my front end piece is I do tax returns. Do you need help with your tax returns? And people just said, yes, please. I don't want to do my own taxes.
So let's jump into
questions.
Chapter number 4. I talked about your tax preparer is giving you bad advice. I use the word tax preparer as a general term. Don't call it accountant. Like anybody can be a tax preparer, right?
You don't have to be licensed.
Yeah. So, so it's a general term. But I've run into a lot of people that started this side hustle thing, like you're talking about, and they take their taxes, they take their bag of receipts to their tax preparer person, and they say you can't claim that for whatever reasons. They're giving them lots of justifications. Yeah, here we go.
You laughed when I brought that up. I'm like, that's last year's, that's not this year's, but there's about 5 clients worth. I don't usually do that, but again, we have big hearts, right? So it's like, I'm sure I know that you over deliver in your group and with your people, you over deliver. I'm like, just give me the receipts so we can get on with filing your taxes. And bad advice, yeah, like people saying, don't claim that, it'll trigger a big refund. I'm like, as long as it's backed up with legitimate expenses, right? Say your car is a tax write-off, your cell phone. Now I'm a bit conservative, so I say 50% on your cell phone. So some people, I think one of your questions are you conservative or liberal? I say 50% on your cell phone, 50% on your internet. Still a good number. Unless it's a designated business phone, you could do 100%. If it's in your business name, you could do 100%.
So what would cause a tax person, if let's say you're in a network marketing or you're doing some sort of side business, and you show up with your tax person with that bag of receipts and they're like, you can't claim that. Let me just take your T4, your W-2 and file your taxes.
I don't want to do that.
Coming from their perspective, what are they thinking? Are they thinking that they're not taking it serious because you don't have all the receipts, you don't really know it, you don't have good record keeping, so it's a hobby? Is that kind of their
that's the first one? But I think before that, they're like, I'm about to quote you like, I don't know, $100. My fee for my fee for a solopreneur with a side hustle with like one, like not like 12 businesses, but like this with a T4 with a side business, it's $200, right? That's it, plus HST.
Yeah,
$200. That's not a lot of money. If I have to spend a day then I might as well go work at Tim Hortons because I'm making less, like all of a sudden $200 divided by 10, I'm making $20 an hour. It's too much work. Too much work.
So it's they don't want to do the work, or it's take it to someone else, or if instead of saying it's $200, it's going to be $750. The person probably won't want to get their taxes done anyways.
Then you're choking because lots of people are like, because they're doing that, they probably don't necessarily have the cash flow, and they're looking for the cash flow. So then you say, well, is it serious, right? Because that can't be like your grocery receipts, and you can't be all your Tim Hortons coffee receipts and your Starbucks receipts. It's like, no, just because you're in business and you choose to set up and go work at Starbucks and make some phone calls this afternoon, that bill is not tax deductible unless it's a meeting.
Yeah. And
then on your receipt, right on to say, Doug and I met for coffee at Tim Hortons today. And I met today's February, what's today, the 18th. So on February 18th, Doug and I met at Tim Hortons, and here's my bill. And I met with Doug, and Doug's a client or a partner or whatever, whoever Doug is. And 50% of that, take people for coffee, because 50% of that's tax deductible. So if I buy you coffee, 50% of food and entertainment is tax deductible. So that's okay. But then if I see all the stuff, it's like one coffee, and I'm like, seriously?
Yeah. So Dwayne, in the home-based business field, which is what we're talking about here in this group, what is the one big miss from an expense, something that people need to know that they need to claim? Like what's, the one that comes to mind for me is kind of the mileage one. It's always loosey-goosey. People don't have good records.
Mileage is a good one. The bigger one, I think, because mileage would have been in previous years, but last year no one drove, right? Yeah. All of a sudden, like last year. And then if you're doing your 2020 taxes, you have to be a little bit conservative, because CRA knows that no one was allowed to, like me as an advisor, I was legally not allowed to go meet with clients. So my car sits in the parking garage like 6 days a week.
Yeah.
So if all of a sudden you're claiming like X mileage and like 80%, you have to have a mileage log, because but don't do it the other way. Don't say, oh, don't claim zero, because there's easy strategies to say, like, even if you just go to the grocery store to go to Staples to buy some toner or something, you can at least claim a little bit on CCA on a car. But on CCA, we talk about capital cost allowance, the actual cost. So if it's a $30,000 car, you can depreciate that cost over the course of the lifetime. The other one, though, that's a lot of people miss out on is personal development.
Yeah.
Especially as people, that's a billions of dollar a year business. Tony Robbins, Eric Worre. So now if you're building that business, and again, just because I named those guys, but there's other, like you could be in a home-based business, go hire a coach.
Yeah.
Hire Doug's course. Doug's course is tax deductible. If you take Doug's $300 course, that's tax deductible. My fees for paying someone to do your taxes for you are tax deductible. So if I can't find you $200 extra on your tax return, I'm not a very good tax accountant. Yeah. But so again, one of my clients, she wrote off the whole Tony Robbins experience. Especially if you're in your corporate job. If you're in your corporate job, there is the new tax training credit, $250. $250. What's that get you? Of course, at Staples.
Yeah.
It's nice, but you're only getting 15%. That's a tax credit.
Yeah.
Not a tax deduction. I know that's one of your other questions about the home-based business tax credit versus a tax deduction. It's a big difference.
Yeah. One of the questions that I wanted to ask you was, if you had you think of a family situation. I have two questions. So the first one would be a family situation. Well, let's say you have a stay-at-home mom with a couple of kids. She's home with her kids all day long, and then he goes to work, or the way around. Maybe he stays home and she goes to work.
Yeah.
why should they consider having a home-based business?
Yeah,
Network marketing, something on the side.
And that's a great one, because what happens is we actually this is built into my presentation that I do, is that it's a lot of people are like, oh, wait a second, you're gonna make extra money, it's gonna mess up our taxes. Ooh, I'm making $100,000. If you're making 100,000, you're paying about $30,000 in tax. You're like, okay, if every extra dollar you earn, I have to pay an extra 30 cents on the dollar in taxes. We're like, oh, wait a second. Because that person has a day job, right? Which is good. Day jobs are good. Support families are run on day jobs. But guess what? This thing isn't tax deductible as an employee. Your home's not tax deductible. Your internet definitely isn't. And maybe you got the home work from home credit, $400, 15%. Great, I get like $50. Your internet, if you remember your internet's running you about $100 a month, $1,200 a year. Half of that's $600. I can earn $600, Doug, and deduct my $600 internet, and I got my income down to zero. So I just said you can earn up to 600. So roughly what happens is I do a quick calculation between your internet, your phone, some personal development, some of your car, and a little bit of your home office. You can make close to approximately, and this is before even taking the personal exemption, the basic exemption of $13,000. Don't leave that alone, because you want to be able to transfer that back to your spouse. You can make about $10,000. Again, no guarantees. It all depends on your numbers, and your home portion of your home expenses. You can make close to $10,000 before you pay any taxes. But I have that extra $10,000 in cash, and I just made my phone tax deductible from a cash flow point of view. My internet, my heat, portion of my car, it's cash flow. Yeah. It's hot. And I didn't see this at the beginning. It took me a while to when I saw the magic. And now I run the first Thursday of every month, I do a Zoom meetup, and that's all we talk about. Tax strategies for having a home-based business.
Yeah. It's definitely a conversation that needs to have more often, which is another reason I wrote the book. Because especially in the network marketing field, because it's always about how great my product is, and my product. But
be a 7-figure earner, and you're like, geez, I got to pay a lot of tax if I earn 7 figures.
It's having that tax conversation.
Oh,
another question I want to jump off on that, and the next one is the incorporation. The topic of incorporating, again, keep in mind it's Canada. Incorporating comes up a lot in the home-based business. So and it's tax people that are recommending it. There's tax lawyers recommending it. And I ask people, why did you incorporate? A lot of times the answer is, well, because they suggested I should.
And then all of a sudden they're like, and they're not making any money. And then all of a sudden they don't have any money I have a client, I was on a call with her yesterday, client, good friend of mine. And she's been incorporated, and she's like, do I have to do a tax return? I'm like, well, kinda. Even if I didn't, I still have to file a nil return. It's called a nil return. It just means that you fill out a tax return and you put zeros in, 0, 0, 0, 0, 0, 0. You have to file one of those. And if you don't, revenue candidate. And even if you want to close your corporation later, you have to catch up. So I have another new client. He hasn't filed a corporate return since 2014. Right? We got to do 6 years of catch up. I can give them a deal so we can package it up and say, listen, if it's a nil return, we're not going to, but some CPAs, they're going to charge you $1,200, $1,500, $3,000, $3,000 to do a nil return. And people are like,
that's per return.
Return. And that's high, because they're like, but they're paying for the brick and mortar. They're paying for the insurance. They're paying for a CPA. Do you need a CPA to do it? No, you don't have to. You can I have a colleague, I have a partner who is a CPA, but I have another colleague who's not a CPA. She does corporate returns. I don't personally do corporate returns, but I can coordinate the corporate returns getting done. So generally what happens is here's my 411. And also for now this year, realtors can become a personal real estate corporation, realtor corporation. Number one is income. Tax brackets, right? Everyone should know about tax brackets. your personal tax bracket, you kind of 15 gets up to eventually, if you're making 200 grand, 250, you're in that 53% tax bracket. Yes, you heard that right. 53% taxes. It's a lot. On the corporate side, corporate taxes start at about 15%. But don't say, oh, well, then go to that right away. They say, no, because you still got to get that money out of the corporation and you're still going to pay yourself somehow. And you got to bring that money into your personal tax return. So in some cases, you do get kind of taxed twice. You get taxed at the corporation and taxed personally. So make it worthwhile. So I now use the number about 200 to 250 in revenue. Because then there's expenses.
Yeah.
Number two would be limiting your liability. So if you're in a business where you think someone, really, if you're in a business where you think someone's going to sue you, it doesn't protect you from being an idiot. If someone's going to sue you, they're going to be sued. Like the guy, there's a civil suit against Mr. Roaring Kitty now, who was pumping up GameStop. That's a whole different conversation. So they're going to sue him.
Yeah,
potentially. If you're a corporation, it gives you protects your home and your family and your personal assets. They can't necessarily sue your personal assets if you're running your business as a corporation. And number three would be if you're in the business where you're vendors. So if you're doing stuff like government contracts, I have a client that's a nurse. She has an opportunity to become a subcontractor for contract nursing.
Yeah.
But in order to do that, she has to be a personal corporation and has to then have her own WSIB, workman's comp, all that stuff.
Yeah. Okay.
And there's a cost. The other pieces, there's a cost. You have to pay a lawyer to actually set up the corporation properly and set it up properly at the front end. All of a sudden you have it up, you open your company, you have like one voting share or something, right? One share, and you're like, and then later now you have some kids and a wife and you want to do some splitting of ownership, and you have to hire the lawyer to redo your share structure because you didn't set up the share structure. Because at the time you're like, oh, it's just me.
Yeah.
But now, Doug, you want to set up your corporation so that you could have your kids as shareholders and you could distribute dividends to your shareholders. But only if you have shares to give them.
Yeah, you got to be making money. So
yeah, so but you have to watch again. Just be curious where, like, for nothing bad against her, but Laura Langemeyer, one of the big business coaches in the U.S., she's like, her first step is incorporate. And one of my clients called me and I'm like, where did you hear that? I'm like, your tax advantages of being a retired teacher and having a side hustle go to zero when you incorporate. And she's like, oh, I'm not incorporating then, because she likes her tax refunds on her retirement income tax.
Yeah. You're stepping in a whole different ballgame. My last question for you here, Dwayne, is, if somebody read the book, started learning about tax write-offs, and they're like, crap, like I've had this home business for years. Yeah, I've had this home business for years and I missed all these deductions. I want to ask you from your perspective about amendments to say, I want to go back into past years, dip into it. I guess, from your perspective, complicated, risky, risk of, CRA going to come and chase you down and say, you know what I mean? Like, just, is it clean? Is it as easy as going into the past and pulling money forward?
100%. I've done it. So I can say confidently, because I've helped a couple clients. One example, and big money too. Like we did it. So my one client, my Tony Robbins client, we actually went and refiled it because she'd already filed her 2018 before she met me. And we went back and we refiled her 2018 and she took it about $11,000 tax refund.
From past years.
One past year, 20.
Yeah,
I said that right. $11,000. Now we had it supported, right? We had receipts. They didn't ask it, but CRA did call me to say, "Hey, wait a second, it's an amendment." They did call me and we kind of explained what was going on. It's valid. She has a network marketing, home-based business, has a job where she paid a lot of tax in, and she didn't know. I have another client who's a retired teacher. And we actually went back. So we did 18 and 19. And so I did that while she was a client, but she wasn't a client yet. And we went back and did 15, 16, and 17. And she wrote a book. This is my number one thing. authors. If you write a book like Doug, if you write a book, that's a business. And if you paid for a book writing program, that's tax deductible. So we claimed hers. We went back 15, 16, 17. We triggered between the 3 years, we triggered $7,500 refund. And we didn't even go, that's nothing crazy either. We didn't claim her, we didn't necessarily claim any of her car. We're like, okay, we'll just start claiming the car in the 18 year. We're not going back claiming any of the car. We just claimed book writing expenses, some marketing stuff, some coaching, internet, cell phone. Now I can't trigger a bigger business loss with my home base, with my office, right? I think you talk about that in your book. If I'm already losing money, I can't make the loss bigger with my home office, but I can carry that forward.
Yeah.
But that's peanuts compared to the other stuff.
Yeah.
Initially, peanuts.
Yeah. It's interesting, right? Because, people should have a home-based business, and then when you have a home-based business, you got to take some ownership and be empowered on these tax write-offs to understand what you can and you cannot write off, and what you can do, and how to record it, and not to show up with your tax person this time of year with your Sobeys compliments bag full of receipts, right? Because
and the other piece though as well is again that whole splitting, like when you are putting your expenses in, it's the expense, not necessarily the taxes. So you got to also have that system where you're kind of pulling out the expenses and the HST. We're probably not going to hit it today, but we'll come back. I'll come back another. We'll just do one on HST. We'll kind of leave that as a teaser. So if people are watching this, and if you want me to come back, and we'll do one just about HST, because that's the other number one. That's like number one A or B myth. It's not a myth. It's real. You don't need to set up HST unless you're going to earn more than $30,000 in billing. Like if you're making commissions, I make commissions as an advisor. I don't pay HST on that. Yeah. But last year and this year, I got a HST refund. HST refund. And you're like, wait a second, HST refund? How do I get one of those? That will be our next episode, Doug.
Yeah, we'll have to do that one next.
That would be good. It's your money. Just have to figure it, and it's 100% legitimate.
Absolutely. So, all right. So we had a few people watching us live. I'm sure we'll catch lots on the replay. If you're
and just as a thank you, Doug. If you're okay, I can drop a link in the comment. If someone, I know you have your conversation, they can book a call with you. But if someone wants. Well, we can talk about it. We'll talk about it after. And if you say yes, I'll drop a link into the group.
If anybody's looking for a tax person, like I have my course, I don't do taxes. So I help you not show up to your tax person with a grocery bag of receipts. You're organized, right? Yeah. And, some people just decide to do their own taxes. So some people do, some people don't.
What I'll do is for your group I have a calendar. I'll drop a calendar link. And it's a 15-minute call. So they can book complimentary, no cost to them. They can just, if they have kind of like a extra something and they just want confirmation from a CPA that it's what Doug told you is right. You just need a second opinion. You're like, I think Doug's pretty right, but I just need that extra. Yeah. I'll drop the link in, and any of your members can book a 15-minute call with me. Just remember, it's like 15 minutes, and it's because tax season. And if you do need some help, I have some room, so I am onboarding.
And Dwayne does taxes coast to coast.
Coast to coast. And it's all online. We're using now, just put in a program called TaxDome, all about workflow, e-signatures, your data is secure, e-filing. I'm actually an e-filing agent for CRA. So refunds after I file them, notice of assessments automatically, and refunds with like 5 to 7 days. Don't go to H&R Block and pay them 5 or 10% for your same day refunds. You can wait 5 days to have me file it for you and just put that money in your pocket. Don't give money away.
All right. Well, that was great, Dwayne. Thanks for your time. And
thank you.
We'll reschedule another one. Let's hit that HST. One. I think that's one a lot of people don't know about. So
it's. And I didn't either, but
money on the table, right?
13 in Ontario, 13% discount.
15 down here.
15% discount. Ooh, I like that even better.
All right. Thank you.
Beautiful. Thank you.
All right, guys. Thanks very much. Thanks for joining us, and hope you got some value here.